Like as
Hmm.
someone living in the US, I get access to a much broader suite of products than
Of
someone
course.
in India does. And for me, as someone who's just 1 year into college, 1 year into a job, I have a greater suite of financial products than my father, who's a high net worth in India. So that was definitely a diff in my mind, that why does this exist?
Hello and welcome to a brand new episode of Fintech Ki Baat Dil Se. Today we have with us Nitish Sahni, co-founder of Paasa. Paasa is a B2C investor platform that brings you assets from all over the world to Indian investors so that you can invest. Along with it, they also kind of have a variety of advisory services to help investors choose the right kind of assets and invest wisely. Uh, Having said that, once again, thank you so much for your time today, Nitish. It's a pleasure having you here. We are super excited to learn about this space. As as we have observed, this is one of the most buzzing space right now in fintech in India. In terms of diversifying your investments and kind of opening up new investment avenues for retail investors. So over to you. Would love to hear a bit about you, and then we'll dive right in.
Yeah, firstly, thank you for having me, Shreyas. Big fan of the podcast, so glad
Thank
to
you
be
so
on
much.
this one.
Pleasure having you here.
Yeah, so a little bit about me. I grew up in Gurgaon. So I grew up in Gurgaon. I studied in Gurgaon as well, was born and raised there. I went to school abroad, so I went to UC Berkeley, and that's where I did my undergrad. And my undergrad was in electrical engineering, computer science. But I've
Mhm.
always just been passionate about fintech, specifically finance throughout, just by virtue of having family, extended family, everyone's in finance.
Oh wow.
So yeah, so actually, in around 2020 during COVID, when I was back in India, then I worked at IND Money for 9 months, and
Hmm.
then while I was in the US as well, at Berkeley, I was part of the FinTech Club and the Quant Club, and then even after Berkeley, I worked at SoFi for 1 year. SoFi is, I don't know if you're familiar, but it's a publicly
Yes.
listed fintech firm. It's around
Hmm.
$30 billion market capitalization. So I was on their software engineering team over there. I was on the data platform team. So SoFi recently got their banking charter. So there was a lot of
Hmm.
tooling and data governance that had to go, that they had to build into the platform. Like, for example, masking PII, identifying PII correctly. So the tool that was built by our team, and I led that project. And then
Oh wow.
while I was at SoFi, I noticed I noticed the opportunity, which was for global equities from India. And I think the
Hmm.
impetus was very straightforward. It was when I was going to college, when I was at Berkeley, my father used to pay from his Indian bank account, and the rupee just kept falling 5% year on year in those 4 years.
True.
And what he'd done for my younger brother, who's 6 years younger than me, he had to open a bank account in Singapore, and then he opened a bank account in Dubai, just so he could park dollars there, so he could fund his education and not get hurt by the rupee depreciation.
Makes
So
sense.
that was definitely the impetus. So that's when I started seeing it, and it wasn't just me. A lot of my friends, their parents also used to open bank accounts in these countries, and the process is cumbersome, costs a lot, very it's definitely painstaking. So
Hmm.
right after that, started iterating on it, got into Y Combinator, and after Y Combinator, moved back to India. And, I've been doing this for the last year and a half. So that's been the journey so far. And yeah, like you described perfectly, Paasa as a platform gives Indians access to global equities, not only from just giving access, but also helping them with remittance, helping them with compliance, helping them be compliant with FEMA laws, because all of that is equal, if not a greater part of global investing. And we do also give financial advisory on global equities as well. For example, diversifying in estate tax friendly funds like UCITS. And then we have a very simple strategy that our customers employ. But yeah, that's at a high level, that's Vasa, and that's my journey.
Perfect. That sounds brilliant, and that's a really interesting journey. Kind of, let's break it down in our upcoming segment called Founder Story. Would
Yeah,
love to hear, a bit about your experience abroad. How did you kind of, work there, and what kind of inspired you to leave your
yeah,
job and kind of get into entrepreneurship? What essentially also, kind of what kind of planning you did that,
yeah,
if you're not essentially getting a paycheck every month, how are you still going to finance yourself,
right.
without any external help? So would love to hear about all that. Over to you.
Yeah, I think so. Even when, I went to college, I was very clear that I wanted to build something of my own. And it was more from an engineer's lens than an entrepreneur's lens because I just love building things. So even in my final year of college, I actually built a personal finance app where I,
Mm-hmm.
used Plaid, where I connected it to my different bank brokerage accounts. And then, I got a view of my finances, and then I got my friends to use it as well. Um, and that was actually the first idea I applied to YC with. And because it's
Mm-hmm.
tough to monetize, personal finance apps didn't get in. But then, I spoke to a few other people, and I definitely saw a gap in personal finance in India. Not only the tooling, not only the experience that's given to individuals, but also the products. Like, as
Mm-hmm.
someone living in the US, I get access to a much broader suite of products than
Of
someone
course.
in India does. And for me, as someone who's just 1 year into college, 1 year into a job, I have a greater suite of financial products than my father, who's a high net worth in India. So that was definitely a diff in my mind, that why does this exist? And I think the builder in me, obviously, I take a very builder first approach. So I always get my hands dirty, always put out an MVP, see what people say, see what people like, see what people don't like. So I think, that's the first part. So I was always into fintech. So like I said, worked at InMoney, then even interned at SoFi, was at the quant club at Berkeley, was at the fintech club at Berkeley. So always knew I wanted to do something of my own. Even while I was at SoFi, I was pretty clear about that. And the SoFi experience was incredible. So I think InMoney gave me a very good example of, what is it to work like at a small company. It was a startup at the time,
Mm-hmm.
and that was very hacky, moving very fast. And
Right.
SoFi at the same time is, yeah, on the contrary, is a much bigger company. And the things that we were tackling, writing data pipelines, data engineering, that's something you see at a big company. That was something that a bank was doing. So having both those experiences really gave me the confidence that, okay, I've seen both of this. I know I can at least build a good financial product from scratch. So I think the confidence was certainly built up by virtue of my experience. And then I think because I'd worked at SoFi for 1 year, I also had, good savings. I'd saved up. So I wasn't very concerned about the financial security as well.
Mm-hmm.
Um, so I think that was actually, yeah, it was actually a boon to have worked at SoFi for 1 year, because that gave me a lot of financial security. Um, yeah, I think, that was the journey. And then while I was at SoFi, I applied to Y Combinator. And then Y Combinator, obviously, they put a $500,000 paycheck into the company. So then, that, your growth, or at least your financial security is more or less taken care of. So all that
Okay.
considered, it was a pretty smooth journey.
Amazing. Great. So, how has it been? How long has it been since you started Pasa? How many months, years has it been?
Yeah, so started Paasa when we got into Y Combinator. So that's when I went full time on it. So that was the
Hmm.
summer of 2024. So it's been 1.5 years now.
Got it. And how's the journey been so far? Would love to hear a bit more about your experiences in terms of something that kind of really humbled you, which you never expected would happen in the entrepreneurship piece.
I think, l- there are so many things that have humbled me in this journey so far. Like, not only like building product, that's something in my wheelhouse, but when it comes to, actually taking a financial product and going to market, the biggest thing that I'm solving for as a startup is trust. And that has certainly humbled me. Going to people, approaching them and telling them that, hey, this product exists. What my job as a fintech company is to sell trust to them, is to tell them that, hey, you know, the fintechs that we've partnered with interactive brokers. So that's our underlying custodian. But for me to
Hmm.
explain to them that, okay, interactive brokers is our underlying custodian. There are banks in India that we work with that give you the lowest rates, and the money is moving from your bank to interactive brokers, and it's a very safe process. I think that getting that messaging right for a very long time was something that I think, a fintech's job. The number one KPI in my mind is that you have to build trust with the customer, because the way I like to think about it is, when I turned 18, HDFC didn't have to come to me. My father took me to the HDFC bank branch and said, open your bank account with HDFC. And now the
Hmm.
process takes time. I have to go to the bank branch, sign some forms, open it, but I still do it because HDFC is this incredible institution that has been around for so long. And then
Right.
on the contrary, there's me as a startup going to customers saying that, okay, this onboarding just takes 2 minutes. Everything is super smooth. And still they have hesitations. And that's just because of a trust deficit. And
True.
therefore, I think the biggest challenge that has humbled me, that it does take a long time to build trust, and you really, really have to go a long way to explain to your customers, educate your customers, and build trust with them. And it's a slow process, and that's something that the instant gratification. Oh, you have this product, and now everyone's going to come and use it. Like,
Right.
I think that mental model was certainly broken.
Now that definitely, I think, and specifically when you're working in the financial services industry, wherein people have to park your money with you,
Yeah,
the trust deficit is amplified exponentially. Like, it's one thing signing up for an app and putting in my email ID and password,
exactly.
phone number to get some get some services or products. But it's a whole different thing putting in, let's say, a few $1,000 or 15-20,000 bucks and waiting to kind of see if they're getting invested. Am I able to withdraw it? The
Yeah,
first entire cycle,
correct.
when I from me coming in, doing in KYC, putting my money in, waiting for
Mhm.
it to either grow or release, and then taking a call to withdraw it.
Yeah.
Once I get the money back in my account is when I will have built trust.
Exactly. No, that's the case for several of our customers as well. So they'll, download the app. They'll just add $1. They'll add one
Right.
dollar and then withdraw the $1. And then as soon as they've done that, then they'll add their $1,000, $10,000, $100,000.
Hmm.
But that $1 penny drop is very important from a trust point of view. That am I able to
Definitely.
get my money back to my bank account? And that's certainly the case with all fintechs. Like, this is not just us. Like, I spoke to other
Of
people in
course,
the
of course.
industry, and
It's a
it's the
problem
standard.
statement for the entire anything when you're building in financial services or fintech, that's a problem statement.
Correct.
So any specific learnings that you have had in addressing this trust deficit piece that you have encountered? How are you kind of solving for it? Are there awareness models, or are there any specific you know jugards that you have found out?
Far from Jugaad, I think what is very important, at least in my opinion, from my experience, is to do your initial customer acquisition very well.
Hmm.
What I mean by that is, if I onboard customers in my early days who are well educated and are notable in the financial industry or industry in general, and then I have built the trust with them, I think that getting the word of mouth from someone who's respected is very important. So let me put it this way, that in every friend group, there is one person who is a financial nerd. And
Right.
everyone else in that friend group is going to ask that friend, what tool do I use? What should I invest in? He'll ask them, all the questions, all the resources will come from that one friend who's very much invested into finance. So my job was to find that one friend, or find that individual who is extremely passionate about finance, and build that product for him or her. So that's what
Hmm.
my mental model was. Because if I can get the trust of this individual, acquire customers who are well educated, well respected, then I think my problem will be solved. Because if I can say that, okay, this person uses the product, or have this person's face on the website, I think that builds a lot of trust. I think that builds a lot of trust with other people. Um, and we certainly did that. I think the customers we had, we had some customers who were using our app in our early days. They were tax experts, so tax partners at EY, for example, international tax partners. And if an international tax partner at Ernst& Young is using your app, who does international tax compliance day in and day out, certainly you've done something right with the product. And then that,
True.
from there on out, it becomes very easy to build trust with other people you're approaching. So I think for me, customer acquisition, definitely not a jugaad, but I think this is the same, right? I think if you look at go-to markets of many other, you put finance aside as well, you generally appeal to people, very few people, but very high quality people, and give them a very high quality experience. And from there on out, it's all downstream. So if you even look at Uber's go to market, they only started with the Uber Blacks, and it was very expensive, a very premium product. And then from there
Right.
on out, obviously, the Ubers that come, they not only have Uber Black, you have Uber X, Uber XL, all of that. But when they started off, you have to start off with a very, very good product for a very, very good quality customer. And I think we just translated that same go-to-market approach in our product as well. So our acquisition was done very mindfully in the early days, and frankly still is.
Makes sense. Makes sense. Then I think the word of mouth, as well as the once that kind of word of mouth takes over, it automatically, organically also starts scaling up.
Correct.
Fair enough. Fair enough. I think this has been a really interesting journey, Nitish. Thank you so much for sharing. Having said that, let's take a quick break and come back for our new next segment called Dhande Ki Baat, wherein we'll deep dive into what's essentially happening in this space, how things work. We'll also probably look at the journey of transaction and so on. So stay tuned, everyone. We'll be right back.